Good afternoon, everyone, and welcome. I want to thank everyone for joining. Today's webinar will walk through a topic that many of you have told us you would like us to cover. Several of our customers became customers because of negative audit findings that led them to explore a better approach to managing the remediation liabilities. I will be your host today. And just a couple logistical items before we get going. Today's webinar is being recorded and will be sent to everyone by the end of today, along with the slides. All callers are default muted, so we encourage you to please ask questions in the Q&A tab in the Zoom control panel. Time permitting, we'll answer as many of those questions as we can live. However, we are going to be keeping this webinar to 45 minutes total. And then also in the Zoom control panel, you'll see there's an option for captions. You can choose any language there that you would like to have this webinar translated from English to. Next slide. So many of you today are already customers or users of ENFOS. Some aren't. So we'll have our contact information at the end of the slides if you're open to starting a conversation. But real quick, ENFOS is a cloud software, and we help organizations manage all of their project and financial and environmental data associated with their environmental liability projects all in one place. Next slide. And as you can see, almost all of our customers are public companies and are bound by the regulations associated with the Sarbanes-Oxley Act. But even with our private customers, many are following those same accounting standards, and a number of the provisions in SOX actually do apply to privately held companies as well. So helping our customers manage their audit readiness is a big part of our value proposition, and I think you'll see that today. So with that, I want to introduce our speaker. Roger Well is a co-founder of ENFOS and currently serves as our president and chief operating officer. Over 33 years of experience in the field, having started his career as an environmental consultant. Roger has a bachelor's and master's in geology, along with an MBA. So real quick, before I hand it over to Roger, I've got just a quick poll to kind of level set the familiarity of the audience with our subject matter today. So if you could just take a couple seconds, I'll leave this open for about 5 seconds, just trying to understand how familiar you are with Sarbanes-Oxley compliance. I'll leave this open for just another couple seconds. We're getting a lot of responses here, and perfect. All right, I'm sharing the results right now. The majority of the people on the call today, about 52%, are very familiar. So that's fantastic. Thank you for answering. And with that, Roger, I'm gonna hand it over to you.
Thank you, Mike. And for everyone that registered and attended, we appreciate it. We've got a good core group of customers and also environmental consultants that join our regular webinars, and we do appreciate it. And if you're new, we hope that you go back and look at some of the recorded webinars we've done and keep an outlook for our future webinars. We're looking at a topic around knowledge management and knowledge retention for one of our next webinars, and we'll have more information on that coming out shortly. So for today's agenda, we'll do a SOX overview. We'll talk about key elements for remediation programs. I'm going to do a solution demonstration focused on electronic audit evidence. And then we have some closing slides where we have tips from our customers who have gone through audits and have used ENFOS to help them provide evidence and demonstrate different types of control activities and financial reporting. What you will learn, purpose and benefits of SOX compliance, conditions that create problems, practices and methodologies for compliance and performance improvement, and how to leverage technology that's purpose-built for remediation and decommissioning. I do want to just flash this disclaimer. ENFOS is a software company. We're not an accounting professional services firm. So I thought it was wise to add this disclaimer before we jump into the detail. I'm going to start with foundational definitions, even though over 50% are very familiar with some of these, but we do have some that are not very familiar or who have heard of it. So let's start off with SOX. So this is the Sarbanes-Oxley Act of 2002. For those of you that have been in business for a while, you probably remember WorldCom and Enron, and there were a few other companies, but back then there were a lot of issues and problems that trickled into people's lives, businesses, and the economy. And Congress enacted the SOX Act of 2002 to improve corporate governance, provide financial transparency, and to prevent fraud. The two areas or two sections most organizations focus on are 302 and 404 listed there. There's another term that sounds familiar to SOX, but it's SOC. This is Service Organization Controls. And SOC is a methodology by which a third-party auditor, CPA type firm, comes in and does ongoing auditing and monitoring of the service organization. So ENFOS is a service organization to our customers, and that includes both SOC 1 and SOC 2. And ENFOS, as we'll talk about in a little bit, has SOC 2 Type 2 controls for the software, and both SOC 1 and SOC 2 for our data centers. AIC is automated internal controls, and we'll jump into that, but these would be different types of controls that are both documented and then using an appropriate technology enabled within the workflow. They could be delegations of authority, segregations of duty, workflow processing, and so on. We'll cover this in a little bit more detail. IPE, information produced by the entity. So this is both data, information, content, and process. And as a software provider in the environmental liability management space, this is an area that ENFOS focuses on every single minute of every single day for our customers. EAE, electronic audit evidence. Our demonstration, when I get into the solution demonstration, will focus solely on EAE. But that basically is automatic logging and tracking and history of all organizational and financial transactions. ICFR, internal control over financial reporting. So this gets into source data, reporting logic, and system parameters. And then finally, the SOX audit. This is an examination of an entity's financial statements and internal controls to ensure compliance. So Mike mentioned that many of our customers had different types of situations that led them to consider ENFOS and then implement ENFOS, basically to replace spreadsheets and homegrown type databases. But there's a lot of information, a lot of data, a lot of decisions and authorizations that get made around remediation and decommissioning management. And in our 20 plus years of experience, what we have found is some very interesting conditions. So in front of the ERPs being the enterprise resource planning software. So you may have heard of software solutions such as Oracle Financials, PeopleSoft, SAP, and many others. But those are ERP systems. So, but in front of the ERP systems and the application that contains all of the details or applications, this is what we found. Most organizations before ENFOS are using on average 12 different software applications. They have massive volumes of emails because email is their primary distribution of communication and information, and sometimes even authorization. And they have even more spreadsheets, thousands and thousands and thousands of spreadsheets. So that's what we find, and that's why there is this information abyss, and this creates complication and problems with audits, as well as just your general business efficiency.
Great.
So,
Roger, just another quick poll just to keep everybody on their toes, make sure everyone's paying attention. Real quick one, how are your existing systems and processes audit friendly? So we'll just keep this open for a few more seconds. And good, the large majority, let's see, 63% roughly, said yes, our existing systems and processes are audit friendly. Hopefully that's because a lot of these are our customers, Roger.
that was exactly my insight, Mike.
All right.
But that's okay. There's still a lot to learn, and other folks on the call that maybe are still using spreadsheets and things like SharePoint and general business applications. Okay. Thanks, Mike. All right, so the proposition that we're talking about here for this webinar is really a business proposition. Whoops. And, I've got a little Venn diagram to help explain this, but, we obviously have the business. This is the cost center management around managing environmental liabilities. These can be remediation, business functions, EHS, if remediation is there. These can also be decommissioning and asset retirement groups within organizations. The financial side is exactly what we're talking about here around SOX and SOX audits. That's basically managing the money. And then the technology. This is information technology, and these all converge. And the basic proposition here is that both for SOX compliance, as well as internal policy compliance and business performance, these are inseparable in today's modern age of technology. You just cannot effectively manage your business, meet all of these financial disclosure reporting requirements without an appropriate technology. So, and these are, they've given rise to the unexpected benefits of Sarbanes-Oxley. There's actually a really good article recently in the Harvard Business Review about this specific topic. So part two of the proposition, what we have found is that remediation leaders seek to converge and consolidate their IPE, information produced by the entity, and their controls and their audit evidence into a consolidated centralized system. And they have, in essence, broken this down into several components, one being project portfolio management. Second one, financial management. This includes liability forecasting and changes through time, budgeting, and spend and cost recovery management. The third area being technical. This is the scientific data management. This is very important to the overall process because this is data that's produced and used by your subject matter experts who are your environmental consultants that do the outsourced work. And then finally, reporting and analytics. That's taking all that content and information and making it searchable, queryable, reportable, used for management dashboards, and so on. So to summarize the overall proposition, there's a key concept in all of Sarbanes-Oxley around the use of appropriate technology. Spreadsheets do not count as appropriate technology if you're still using them. If those are being authorized by your auditors, then more power to you, but you do have opportunities to advance yourself and reach a higher level of technical maturity and business performance. Also, a single joined enterprise data set. What auditors hate is when they've got information scattered all over the place. Different systems, emails, local file shared drives, and so on. Communications with suppliers and intercompany departments is a critical element. This is about improving audit readiness and our audit quality. And we have had auditors tell us that when companies have converged and consolidated into a centralized system. This leads to less intrusive audits. So I'm going to go over some key elements around two of these three areas. The first one being project portfolio management as it relates to SOX compliance. So project portfolio management for some organizations is a big effort. If you're managing several thousand projects globally, that's a big project. But even if you're managing 50 to 100 sites all in the United States, you're still dealing with sites and facilities and locations, and then the areas of concern that are part of that parent facility or parent site. You may call these environmental matters, you may call them projects, you have different terminology, but those are the unique remediation entities that are children or child level to the overall site or facility. So having the process around identification and tracking through their long life cycle is critical. Completeness of the portfolio. So we have had auditors tell us that sometimes they'll go in on an audit, they'll say, show us your site list where you have your environmental liabilities. And the auditors will go out and do independent research within the US EPA or the state agency databases and systems. And they're actually doing a reconciliation on those around active incidents and active projects. But this concept of completeness of portfolio is a major element in project portfolio management. Remedial strategy and approach with all the history. Life cycle phase and milestone management, another key element. Consultant qualifications. So who are these consultants? What sites are they assigned to? What types of contracts do we have in place? What are their statement of qualifications? How long have they been working for us? What % of spend do they have of our entire portfolio? These are all questions that can get asked during audits. Compliance with environmental regulations and consent orders. So this is the environmental compliance side of it, but it certainly drives the concepts around your strategies and your scope and ultimately your life cycle forecasts for your liabilities, and then changes through time. And then property and asset considerations, active facilities versus inactive facilities, sold properties where you might be a minority RP versus being the primary management RP, such as a large CERCLA site. I'm going to go over a few key elements in financial management as well. So financial structure is probably one of the most major elements around this. So this has to do with expense types, uniformity of the work breakdown structure, and the chart of accounts. And it's one thing to have a chart of accounts for tracking and managing actual spend and actual invoices, but it's another to have that within your planning and budgeting area, as well as your supplier work proposal and statement of work creation. So having this extended WBS throughout the end-to-end financial process for different types of expense types, such as an environmental obligation versus an ARO versus a non-reserve expense, those are expense types, is very critical. Financial calendar and rhythm. Ultimately, what auditors are looking for, they may want to make sure you have the control environment and the control activities in place, that you have up-to-date and accurate financials. Accounting logic. So software is great at performing calculations because it's coded and it doesn't have human intervention. It doesn't have transcription from spreadsheet A to spreadsheet Z and then involve manual-based consolidations and roll-ups. So net present value, that would be inflation, discounting, and accretion, adjustments, and balance calculations. The authorities. So this is a very large area when it comes to control environments and control activities. So segregations of duty or segregations of authority, depending on your company's terminology, and then delegations of authority. Can the same person approve an invoice that can approve a purchase order, right? As an example. Delegations of authority have more to do with financial authorization limits. And usually within organizations, there are 2 to 3 levels, a level 1, a level 2, and a level 3, and transactions need to flow through the escalation process until they can be fully authorized with the individual with the proper DOA, delegation of authority. Internal controls, I have a slide on this, so I'm going to come back to that in a little bit. And then compliance with the accounting standards around AROs and environmental obligations and IAS 35 for internationally owned organizations. And consolidation and roll-up of financials without human intervention. This is one of the major areas of data integrity breach or data quality problems, is roll-up and consolidation, especially with larger portfolios of, say, 50 sites or more. It just is very, very prone to having errors and miscalculations. Environmental supplier and other third parties. This work is outsourced. And so having the financial management elements around contracts, rates, vendor proposals, purchases, and invoices is a critical element in the financial management area. And then data integrity. So from the source, that's their source data, all the way through your final reports. This is a big area that we see around ICFR, and technology is really the main lever to help you achieve and then show evidence of that, from source data to final reporting. Automated internal controls. This was one of the definitions we had on the second or third slide. These are controls that our customers are using, and they're able to show evidence, and they're able to get through their audits cleanly. That we have 2 categories here: transactional controls and organizational controls. The organizational controls are a little bit higher level, but these have to do with approval limits, gatekeepers, automated next approver workflow, vendor pre-approval of, let's say, subcontractor or laboratory spend, and then logical data segregation by vendor company, user account, and project hierarchical structure. So those are very key elements around organizational controls for your SOX compliance. On the transactional side, I won't go through all of these, but what you see in here is that we have both scope and cost controls that are configurable based on a company or a governmental entity's organizational policies and procedures. And these have to do with ensuring that the transactions meet all of the required documentation and internal control activities. And they include things like, if I have a budget approved, which might be a multi-year life cycle forecast, how do I ensure that I'm not committing those dollars to my supply chain above that level of the balance? That's available to commit check, as an example. If I can't commit the money because there's not funding available in the balance of the reserve, then there's no way I can spend it, right? Now, we also have available to spend, balance, and task level detail on scope and cost controls, and then also earned value. How do we know that what we're buying, what we're spending, we're actually getting the work completed? So that's a control that organizations use partly for project management, but also for compliance to their policies and procedures. So ENFOS shares documentation that our customers use as part of their documentation for their audits. This is an example of one. We have about 4 or 5 of these for different areas. Some are more process-oriented and some are more IT security-oriented. But this is an example of financial controls. And you can see there's 7 of them listed here. I won't go through all these because I touched those on the previous slide. But having documentation in your work environment, and then to have that information that you can provide to your auditors is a key element in your audit success. So I'm going to move now off of the business side a little bit and talk about the IT areas of focus. I mentioned this SOC, Service Organization Controls, and that ENFOS has SOC 2 Type 2 independent third-party certification here. These fall into 4 primary buckets: IT security, access controls, data backup, and then change management. These are all designed to protect data, provide digital security, and to eliminate threats of breach. So it's around data protection improvement, and I mentioned data breach, but also to increase the value of your data assets as well. So this is an area that ENFOS, on behalf of our customers as a service organization, spends a lot of time and effort, and we do continuous monitoring with a third-party auditor and provide our customers with annual reports showing our SOC 2 Type 2 activities. All right, I'm going to jump now into a solution demo. So give me a minute here to get this oriented. Okay. Mike, are you seeing the screen? I just want to make sure that this is still sharing.
Yep, I see
Okay.
it, Roger.
Okay, thank you.
Mhm.
All right. I mentioned that I'm going to focus on electronic audit evidence. And this is going to be maybe about a 5-minute overview. So if you're an existing customer or you're evaluating software, contact us if you want more details on this, because I'm really going to go pretty quickly through it and show these major areas of electronic audit evidence. So the first thing I'm going to do is I'm going to navigate to a site. So this is called our demo site. And I happen to be in my site module, and I'm looking at my summary section. And when we talked about project portfolio management, identification and tracking of your environmental liabilities, this is the area where our customers are leveraging ENFOS. So this is just a fictitious site. You can see there's all kinds of metadata that would meet the data governance or the data requirements that the customer has. And then there's sections of data. And I'll scroll down some of these, but I can obviously look at what vendors are assigned, who the contacts are on this site, all of the backup documents and files organized within a structured folder and subfolder system. So I know where to go on every single site to get the information we need for the audit. There's other technical areas in here like sensitive receptors, points of interest, access agreements. But on the bottom of every info screen, you have this history section. And what the history section is it's giving you a date timestamp, the action taken, the description of the action, and then who performed it. So this is embedded within the ENFOS application so that the logging and the tracking, which then gets used for audit evidence, is taking place naturally and organically during the course of people doing their jobs. There's no extra work to get to this. And this is in every single module and submodule within ENFOS. These are all non-financial type of logs. I'm going to show you some financial logs here in a little bit. Okay, so these are part of the organizational controls. Now you can see that this person named Roger Well did something. So I can look at his contact information, and I can also view his details. So what I did was I actually went to the user account. This would be for administration privileges. maybe during an audit or during just your general, control environment setup. But now I'm looking at the user account information for Roger. And I can see that he is in a financial limit group called Vice President Limit Group, and I can see the delegations of authority assigned to that user based on these different types of transaction types. Basically, you have initial liability forecasts, changes to those through time, purchases or work commitments, and then spend. And those obviously can be different numbers based on the DOAs. The user privileges, which are always key information during audits. What access, how are we limiting access? How are we controlling access to our information assets? It's always a big element of an audit, but I can quickly come in and look at that individual's permissions. Very granular by section and function, and then also by activity, report, view, modify, or add or delete. So that's their user permission. What sites do they have access to is all documented here. That person's next approvers. And then, like I mentioned before, a history page just for this user log. These are at the bottom of every screen in ENFOS. Again, date and time stamped, action, what happened, and who performed it. Okay. So those were some organizational controls. Now I want to look at some financial controls for a minute here. So I'm going to bounce back over to our site. And underneath the site, we have our areas of concern. These would be if this is a remediation program, these would be our unique remediation AOCs that we have created following a process within ENFOS. So I'm going to select one and navigate to it. I'm now at an area of concern called 01 site-wide. And I'll have all of that project portfolio management content available. But if I come into finance, this is where we have all those financial management processes that are used for your SOX controls and your SOX audit evidence. So for planning, we have plans. That's a list of all the various plans throughout the life of that project. I'm going to go to life cycle. Life cycle represents the current approved forecast for this liability project. Multiple scenario types are available. Configurable work breakdown structures up to 4 levels deep. This is a 1-level WBS. And then your cash flow timeline as far out as your policy goes. And you can break years down into months or quarters. So this is showing all annual. Another area that auditors and customers go to would be this all years in history. So now I can go back in time and look at the actual costs. And then I can look at previous approved plan amounts. So here I am in 2024. There's $5 million projected for corrective action. If I click that link, I now have the history and the audit trail of how that value, that's one cell in the overall grid, has changed through time. So we're currently at 5.03 million. That was approved on January 25th, but it started out back in 2022 as a $2 million estimate. Okay, so that's life cycle. The next one I want to talk about has the accounting logic. This is called balance. This is built-in reserve accounting logic that calculates the balance to the penny in real time, either in nominal dollars or in a net present value or discounted model. Financial statement. This information is non-editable because this is all information that the system is calculating through the automated logic. So I can see the original estimate, the sum total of all adjustments approved through time, the sum total of all spend, and then here's my balance in real time to the penny. That 6.3 million is carried down here, but now I have a phase of work breakdown of that balance. Now, one of the internal financial controls I talked about was not allowing overcommitments. So if I have a balance of $100,000 for initial abatement, and I have open commitments already of 19.9, my available to commit is only $80,000. If I get a proposal from one of my consultants for anything exceeding $80,000, it's non-approvable, right? If I'm using that business logic, that's a configuration. So if it comes in for 90,000, I either have to have the supplier lower it, or I need to go through our process and do a plan change following the control activities associated with reserve adjustments. Okay. Just a couple more items here. Oh, by the way, I wanted to actually show you this area here that's called plans. So in this example, we're looking at a remediation area of concern that's been ongoing for many years. And we had this initial estimate, and then we've had reserve adjustments through time as we move through certain phase milestones, or if regulations changed, or if we had an operational issue, or if we just underestimated or overestimated costs. So that area is called plans. So when I come here, what this table is showing me, and let me expand to all rows, I have 26 documented reserve estimate adjustments made through the life of this particular AOC. The oldest are on the bottom. So there's my $67,000 initial liability estimate that was approved following DOAs. The reason why, that's a valid value list or a drop-down list so that you can force factor all of your changes through time for analytics and evaluation purposes. I can also, with that click, go back in time, and I can look at all of the forecast at that time, who did it and when, all the authorization levels, and project detail information. So what I have here is there's the $67,000 that was estimated back in 2018, right? 2019, 2020. So I can see that by work breakdown structure. You also see that we have schedule as well. So this was the schedule 6 years ago, right? It's non-editable, it's part of the archive, and it's accessible with basically 1 to 2 clicks. And then underneath it is the history. Again, I mentioned there's a history log underneath at the bottom of every single page inside of ENFOS. So this was a net adjustment for approval. The user had a $100 million limit. It went from an editing status to an approved status, and it was done by that person. Okay. If I come back into plans, what we did there was we looked at the initial estimate that was done back in 2018, but look at all of these changes through time. These could have been made in our quarterly reviews. They could have been made in an annual deep dive. They could have been made on a trigger event or a milestone type event, right? Again, it's based on policy and procedure, but it's all here, including the decision support package. The decision support would be additional justification or support around that new strategy, the estimate to complete from that point forward. But if I come all the way to the top, that's my current plan. So this is the plan that's currently in effect. You can see that's 6.41 million. And on a forward-looking basis, I can see what my cash flow forecast is. Okay. All right, I'm going to drop down to purchase orders. So I'm on the same area of concern. If you're looking around your purchase commitments and your spend, you'd come into this section. So this is a list of all the POs. I can find a PO of interest, click it, and drill down into that PO. So I can look at my purchase order detail. That was the scope of work that was provided by an environmental consultant for me, $105,000. Your purchase order balance, pending proposals, earned value, and here's the PO history. Who submitted it? Who approved it? What were their delegations of authority? And here's all the spend inside of those invoices. So now I drill down another level. Now I'm looking at an invoice against that PO. So I think you can start to see that this end-to-end process, from planning and budgeting and forecasting all the way through spend management, is traceable all the way through up and down that process. So for every dollar we're spending, I can trace that back all the way to a plan and a budget that is part of my reserve management process. Okay. And I had a couple more things, but I'm looking at the clock. We have 5 minutes. So Mike, I'm going to stop there and we can answer some questions.
Hey, Roger, did you want to go through the tips, the customer tips?
Yeah, I'll do that, Mike. Thank you.
Okay.
Okay. So we surveyed existing customers and asked them for tips to share on this webinar. And here they are. ENFOS gives us supporting evidence around our vendor supplier information, including backup documents. We leverage the ENFOS plan form as evidence of our review document for our initial reserve and reserve adjustments. That was the decision support package. I didn't drill down into that, but I showed you where you access it. Another customer tip, we reconcile the single line reserve balance in the ERP system with ENFOS. And ENFOS is where we maintain the site and the area of concern level of detail. That's a very important issue. Most of our customers do not have a reserve for every single environmental matter in their ERP system like SAP. They use a front-end system. Our customers use ENFOS for that. And those get rolled up before they ever get over to their ERP system, whether that's SAP or Oracle Financials or PeopleSoft. But the auditors have to get into the detail, right? One line of a reserve balance at the start and the end of a quarter or end of the year doesn't cut it. We give our auditors training on the ENFOS structure and data model. This answers a ton of questions, provides much of our evidence. With ENFOS in place, we create written documentation, another very important tip. So even if you have appropriate technology like ENFOS in place, written documentation is essential. We always involve someone from the business and IT when discussing the interfaces between ENFOS and the ERP system. That's, I think, a very good tip. A lot of geologists and environmental engineers might not understand a REST API and success and failure messages along the way. So to discuss that with a subject matter expert is very critical. And then I showed you guys a lot of this, but transaction and approval logs with date and timestamp. And Mike, we can move into questions, but I'm going to go ahead and throw these up.
Perfect. So
Yep.
just a reminder to everyone with a couple minutes remaining, if you do have questions, you can put it in the Q&A tab. But one of the questions that came in, Roger, is how does ENFOS ensure data integrity in reports that are produced by the software?
It's a very deep and important question, because if you think about it, we have our source data. The fewer systems your source data is in, the better, because you really can't control it within 150 different spreadsheets through time, right? Or 12 different software applications. So if your source data has data validation within that application, valid value management, data format tests and requirements. Are we looking for a US dollar amount or a Canadian dollar amount or a euro amount, right? You have forced rules within the application in the source data to basically error proof or prevent errors moving up. And that is a software capability that's very important that you just don't get with spreadsheets and homegrown databases. The reporting logic follows the accounting logic. So if you test your accounting logic in ENFOS, which are our balance calculations, our discounting calculations, accretion calculations, if those are tested, which they can be, because all of our customers have a test environment in addition to their production environment, then the reporting logic gets matched up to that. If you need to do a reconciliation process to compare the two, you can. Most of our customers don't, because they've already gone through, in essence, the due diligence on that within ENFOS. So what they're doing is they're comparing an ENFOS report to their ERP report and making sure those are reconciled, right? There are system parameters also that help report the reporting data integrity. And I'll probably stop answering that question there, Mike, if you have another one.
All right, sounds good. Just one more real quick. So aside from compliance, what are the operational benefits of adopting SOX controls for managing environmental liabilities?
Okay, yeah, that's a great question. And that really was the initial proposition, right? We had business, financial, and technology, and we had that overlap area on the Venn diagram. And I mentioned the unexpected benefits of SOX. So certainly operational effectiveness, and that is both efficiency and effectiveness. Because if you've automated workflows, you've automated your information and your source data areas and the data validation, basically the data quality management on that, you've eliminated these error possibilities that are caused by redundant and duplicate data entry, transcribing data from spreadsheet A to Z. You have freed up time on your organization, right? So, and your supply chain. So for project cost tracking, project management, audit preparation, actually responding and mitigating audit findings, all of these activities improve that efficiency and effectiveness. Then your smart people can start using that information and that data to help make better strategic decisions on remedial strategy, on design, on regulatory advocacy. And this is really what our customers are trying to get to. Rip out the low value added activity that creates problems around our IPE and the data, and get our people focusing on the things that will matter to them based on their subject matter expertise.
Excellent. Great answer, Roger. So I know we're a couple minutes over time. I appreciate everyone that stuck with us. Again, by the end of today, the slides and the recording will be sent to you automatically. If you'd like to have an additional discussion about this or about ENFOS, feel free to reply to that email and you'll get routed to either myself or Evan, and we'll put some time on the calendar. So again, thanks everyone. And like Roger said at the beginning, look out for an invite to our next webinar around knowledge management. Thanks again.
Thanks, everyone.